Hey, how's it going? And pop up the chat. All right. Welcome. So, analyze your trade. Let me see your trades, and I got one right here that's hot and live. Looking for Twilio to pop up to this target zone right here. Right there. All right. And so as we go along, I'll kind of teach my pattern that I look for in the market. There's kind of two main ones. First one is a bounce off this, what I call the roadmap line, and looking for an extension. So CVLT is the first one I see. And put the clicker on the right thing. CV, Charlie Victor, Lima Tango. And right there on the 30-minute time frame. So let's go up to a daily, just kind of check it out, see what we got. And it's up here in sky high land right there. How high could it go? Well, let's check it out. It's the point of this thing, right? Analyze your trade. So we could possibly make it up to the 2618 level on the daily here after this large last consolidation back here. Fix it just slightly. And the last, it's a even like blip of a correction there. And we're reaching some ridiculous levels there on that extension higher. So I would kind of be cautious if I was long this stock that we may see a pullback. Could it go on to be the next NVIDIA? Maybe, but it doesn't look like it's going to, at this point, is reaching some extensions. And yep, that very classic extension here. I rely on Fibonacci's and technical analysis quite heavily. And this would be nearing a top out zone for me. I would not expect much higher than somewhere in this 160 to 190 area before we got another sizable pullback. Sizable could be back down to the breakout level, even back down to the 84 area. So right there. All right. Hopefully that helps. And I typically stay on the daily time frame unless you specify a different time frame. Right there. And next up, Nikki says you. So YLU right here. We have a nice potential bottoming kind of reversal pattern here. Now, first, like I said, I have two different patterns. The bounce off the yellow line was the first kind of pattern I was looking for. This one actually came up, bounced off of it, came down, made a higher low, indicating a reversal set up in the market. And now we're getting this break above this move here. So the trend was down coming into this. And we've kind of got this, what I call a measured bounce kind of reversal pattern. And I did go a little deep for a measured bounce because we go from this high, this low. We hit the 786. That's not my favorite. I like to bounce at the 618 just to kind of teach this pattern. So we have a trend, and in this case, down. Then we get some sort of reversal of that trend. And then we get a retrace on that reversal. Now we like to see this kind of set up right here. So we have the big trend, we have a reversal, we have a reversal of the reversal. It kind of piles up. But right here, we run a fib line from the bottom to the top, and we hit the 618 on that retrace. I've drawn it a few times. That's how I got it right on the, almost right on the money there. And what we're looking for is a continuation of that trend. Now, the targets for that continuation would be something like this, where we go this point, this point, this point with a 3-point tool. And we want to see something like a 1272 or 1618 extension of this first reversal move here. So when we're talking about this move right here, projected off of this, hopefully bottom right here, and we get that extension into this zone, and we target these numbers here. So that kind of highlights what I'm looking for on this particular chart. So we have this move up, we have this retrace, went a little deeper than the 618. I would have liked to see it hold up here, but we went a little deeper, and now we've started launching off. So we use that 3-point tool from this low to this high to this low right here, lowest low, and this gives us some levels. The 2970 would be one to watch right here, right in there, and then this 35 level above that as a potential. And just based on having watched this dozens and hundreds of times, I would not expect much more than 35 before we got another reversal and retrace. And that may take us back to retest this breakout high right here. We broke above that. We may come up here and come back and retest that before we can gain some strength. And it may actually do a roadmap line retest. I call this orange line my roadmap line, and we may actually come back down off of that, find support here, and then go cruising on to the next trade. So that's kind of what I would expect here. Now, where would you be wrong? I break back down below the roadmap line. Now we could reject here and come back down there. And if you broke down below that, watch out for lower levels. All right. Hopefully that was helpful. Right there. Next up, UPS. So UPS on a daily chart. Oh my goodness, where is the bottom? Right. So back to pattern number one, a bounce off the roadmap line. Now that works on the upside and the downside. So we've had a bounce here and we got continuation down right there. But we bounced a couple times in between there and set up some other targets. Now we're coming into potential support around this 126 area, and we've kind of seen some support there, but we may push it down to the 117. And if that doesn't prove to be support, well, we have to go look a little higher time frame here. Yeah, we're that bounce right there, hitting the 1618. Could see some extensions on down, but it gets less and less likely. Now, a couple other ways to run this. Off of this high, this low, first big move down, retrace here, and that roughly is the 618. Same measured bounce pattern right there. You run that, and that trend was up. We get that reversal. That's just an upside down measured bounce coming into that target zone 118. That kind of jives with the 117 I said a second ago. As a potential, 118, 119. Yeah, that's a confluence there. Two different ways to run the patterns. Probably going to be looking for support right in there. And a third way to do this. Off this high, this low, and look at there. The 618 coming in right there. So that's going to be a pretty significant resistance, or resistance for going lower, or support in the market right there. And I would expect it to find a bottom here. If it doesn't, we may be looking at a lower low than what we made right down here at 81. So maybe looking for an extension down to the 70 area if we get below that zone right up there. Could be extending right down like that. Yeesh. Yeah, be careful on that one. Definitely be careful. We want to see that turn. Now, if we do turn right there on UPS, the potential could be way up here. Some ridiculous, absolute ridiculous numbers right up here. It's right there. Could be looking for that. Right like that. All right. And next up was ALB. Man, where is this one going to bottom? That would be the big question, right? How much downside do we have left to go? And I have some scanners firing off alerts like crazy. And we have that measured bounce, like that 618 level. Oh, did not stop there yet. So we had this big trend. We had this reversal. Came down, did not stop at the 618, pushed on down. If we get below this 786 level right in here, this may be indicating that Able Marble comes on down. Able Marble, however you say that. It's not looking too good at finding support there at this point. And that last little roadmap line bounce right there from that low to that high, coming into extensions there. So if we don't hold that at all, we're not respecting support at all, and we may go on to make a lower low than we made back here in 2020. Or Able Marble. All right, workhorse. That one, I don't know. That's maybe the end game here on Workhorse. Doing a reverse split. This is what I call a dumpster fire pattern. Has no real sign of a bottom at all. And they kind of blew the opportunity for a USPS contract. And I don't know, looks like 45 cents maybe in the cards here on the extension lower right down there. So watch for that extension. That's the best I got on Workhorse. All right, Shopify. And Shopify has been pretty interesting to me. I had a big trade on that last year on this reversal in, well, I guess it was this one in March, this pop up. Then I've just kind of ignored it for a little while. And let's see what we've got cooking here. So made this move up, come down, didn't quite get to what I call a measured bounce right here. Came up shy. We have done a retrace down below the roadmap line. Kind of done this. Didn't hit extension there. This swing back here was a little smaller and kind of maybe we got a little too excited on the downside there. So that doesn't really clear anything up on that pattern at all for Shopify. That went a little too deep. So right now, Shopify's kind of muddied up the pattern just a little bit as far as cleanness on this correction right here. Maybe it got a little too excited on the downside. Maybe it just, maybe that was enough on this retrace here to count. It just didn't quite hit into the fibs. So I like going after the higher probability things. This one didn't touch levels that I wanted to see. So it may be indicative that we're not done on this current correction yet. We may see a little lower here is what that is telling me. It's telling me to be cautious because we haven't hit, the levels just aren't jiving very well. So we have this potential retrace here. If we can hold on to that low and we keep breaking out, we are pushing above my daily roadmap line there, making a slight higher high so far. Looks like yesterday. Yeah, yesterday just a slight higher high. We can keep pushing that. Could see a rebound quite high here up into this zone at a minimum right up there. And if we get really bullish, we could see 416, a breakout higher. Now, looking at this bigger picture wise, let's just kind of remove some drawings. This high here, this low right here. We stopped at that 618 level. Remember that trend, that reversal, the reversal. Stop at the 618. So this is a key level here to watch out for if we start breaking down. Since like I said, it hasn't jived here, hasn't been hitting levels that make a lot of sense. If we get that CPI, comes out a little spicy tomorrow. We get retail sales on Friday or Thursday. If we see the retail sales coming out weak, we may see this breakdown. Getting a breakdown below this could set this up for a bigger, deeper, nastier correction down in this neighborhood. So this is something to watch out for. Short term, that's not very clear, but on longer term, we're kind of setting up this possible deeper retrace on Shopify here. Right there. All right. So that'd be I would be very cautious if I was long right now. I really want to see this break above here. Now, if we can break above this 618 zone, 222, 285, 563, maybe on the upside. But looking a little iffy for me on Shopify right now. It's one reason why I haven't really taken a trade since almost for over a year now on Shopify. All right, moving on. Mara. Marathon Digital Holdings. And let's just clear some stuff up on this chart. Starting out right here on the weekly, I already know that this one's got a beautiful pattern for a measured bounce right here. Kind of consolidating here. A little struggle to get through that roadmap line on the weekly chart. A little bit of struggle. Kind of expected when you go this big a time frame. So the potential here, absolute ridiculous numbers, and maybe I should take it out of log mode, but absolute ridiculous numbers for a potential upside on this thing on a weekly basis if we do that measured bounce. Something this low priced, $15. That seems low probability. Okay, that's just there's not many stories where $15 thing goes to 600, but it's in that chart and it could do it. Could. So that's one. That's interesting. Large upside potential. Now zooming down, going back to the daily charts. Let's see what we got cooking. So we had a trend going down. We made a bottom into the lows of the crypto winter. Made that bottom, made this retrace, and that was basically a measured bounce type setup. A little bit shallow on the shallow end. The 618 is my ideal spot to bounce, and then this came up short of targets. So this right now has got some upside room above it on this smaller daily time frame to come on up in this zone right here. And we're just kind of consolidating on that daily roadmap line. We came up, bounced, and this bounce right here played out. This bounce right here did not play out yet. Did go lower low. So now we've got that low is the low in place. We rejected that 618. We may, this is where it gets a little bit muddy because we could go a little bit lower on this move right here to 12 or 11.99 area. And that high, yeah, that kind of corresponds with that $12 area two different ways. So $12 area is support right now. Right around that 11.99, 12.50 zone support. And on the upside, looking for this area right here, 44, 45, 57, 74, and possibly out to where we get this confluence of lines right up here at the 140 area. If things got really spicy to the upside, could see that rally right up into that zone right there. Mara. Now, where do we know we're wrong? If we start breaking down below this $10, $11, or I mean, $12 area right there, we may see a deeper retrace into the $6 area, and then below that could set it up to get down in the single digits, low single digits right there. All right, that's Mara. Coin, been a little more bullish here. The ticker was Coinbase. We've had interesting kind of, see, we set up that reversal off the lows. Reversal down here at 618. And it's kind of kicked off the bigger pattern here. That measured bounce. And it played out right to, imagine that we had some resistance here at 235. And we've just kind of been consolidating it, trying to bleed off, gain more energy in the market. After we played out that first initial reversal move off that big drop, setup and reversal. And now for Coinbase, I've been wanting to see a retest of this roadmap line. We kind of did it back here. We missed it right there and we hit it. I've been keeping my eye on this one, particularly right here. We've got this high, this low down below, and we're consolidating just under it. When we break back above the 618, looking for 307, 330, possibly 400 on those targets right there for an extension. That's what I'm watching. Now on the flip side, if we break down, a move down below this low right here could be indicative that we've played out this entire reversal move for now, and we need something deeper, more sinister in the markets, as I call it, some sort of retrace into this area back here before we can build up energy to go higher again. Maybe a retrace back to there, look for support there. And if we don't find support there, it could go on down to like the $20 area down here. Be like, yikes. So that's some levels to definitely watch right there. We start breaking below this low that we just made, what, 2 weeks ago, roughly. Break below that low, not looking too good for the Coinbase home team right there. All right. I see the next ticker request was Win Resorts. And go. I'm using the Trading View platform, available for anybody to use for free. Nothing I use on here. Everything I'm using right here is all part of the platform, or I offer for free on my YouTube channel right there, the roadmap line. I give it away as my favorite indicator right on my YouTube homepage. So if you want to check that out, you can go to jeffrytrader.com/YouTube. Have David post the link in the chat. Now, Win Resorts has, just looking back, first thing I like to do is figure out where the low is on a chart. All right. 'Cause I tend to like to be bullish. So in the last couple of years, the low seems to be this low right here. That's the one of interest for me right now in the current price action. And we may go look for a different low if things aren't working out here. But this first move up stopped right there. We got a deep measured bounce type retrace. You can see my two patterns kind of coming together, working together here. Moved up, got a little bit, like Coinbase, we went a little bit through the 1618 and then just kind of stopped there and just been hanging out, not able to go any further. That's all right. That's interesting, right? I think it's interesting. And then we've done a retrace off that level. We came up to a lower high. So at this point, these highs right here are important, and this is important. So we've used the 2-point tool right here. Stopped. That's a measured bounce upside down at a 786, 76.8 retrace of that first drop. Held, and then we went on to break lower. By break lower, I mean lower than this low right here. This is kind of what I was cautioning on Coinbase that could develop if we start breaking below that low. Now, using the measured bounce 3-point tool here, you can see we're down into potential support here. 69, possibly 61 would be where I would expect to see some support show up. We've got some showing up right now, but we've already pushed through that 100% level. So the next level down right there at that 69.35 level. We can zoom it up and we can see it a little tighter here. 69.35 and 61 on down here would be the next kind of level to watch out for. Now, because this was a kind of a maybe a three-wave down off of a sloppy up. Yeah, that jives right there. I really want to see this hold at that 618, that 70, 69, 70 price target right there. Now, I commonly hold that the fib lines are not definitive to the penny prices. They are fuzzy zones, plus or minus a few percent on a stock. So actually, that's why you've seen me draw these boxes like this. I can code Fibonacci's. You can code Fibonacci's. We can all draw them. We can watch them. We can look at them. That means all the algos that are out there can do those also. Anybody that can program in these levels. So sometimes if there's a lot of algos running on a stock and it's been respecting the Fibonacci's, there's probably some algo programs running Fibonacci's, and they will short run each other, or, front run each other kind of. And we may either come up shy of hitting a Fibonacci line, or we may push it through and go a little deeper than the Fibonacci levels or lines. So that's why I hold them as zones, is because we may see this a little over exuberance, either front running, buying ahead of a short algorithm, trying to rip that short, or we could see if if an algo was buying long and you had some other ones that were running short and they pushed it a little deeper, you could see that both those actions happen all the time. So I do hold that these are zones, not just definitive solid lines to the penny on a price chart. So now that this creates a potential measured bounce setup right there with that move up and this 3-move retrace. Now, retraces tend to happen in 3s and impulses or trend moves tend to happen in 5s. So this potentially could be a 1, 2, 3, 4, 5, even though the 4, 5 was very sloppy here. This very clearly a 3-wave setup right here. And that measured bounce potential right there, move up, retrace, would potentially set us up for a massive explosive type move up into this zone right here. I'd probably target something in this neighborhood right here. And if you want more of those, I've got some more that I brought that have this kind of setup potential in them right now. That's a beautiful potential trade right there. Going from 74 up to 160. That's a double just in share prices. Now I'd want to see it break back above this 90 area, the roadmap line, and it's going to continue to decline until we can break above. So I'd want to see that get above that 88, 89, 90 area right there, kind of confirm that we're going to see higher. Then we got to break above this high and this high to get the continuation. But could go as high as 270. I tend to be a little more conservative on my targets right there. That's win for you. NVIDIA, NVDA. This one's an interesting one. This, I commonly talk about the fact it was kind of a bubble pattern. This reminded me a lot of Cisco in the late 90s, early 2000s, where a company that wasn't among the top companies in the world suddenly became the biggest company in the land. And NVIDIA was biggest company in the land for a short period of time and then started a decline. Now, something to watch out for on this particular chart. This was kind of somewhat reminiscent of an exponential move up. And we were a lot of hype. And we had a lot of people that aren't traders talking about, hey, you want to make a bunch of money in the market? Just buy NVIDIA. That gives me a little bit of concern. And especially when you go out to the weekly chart and look at that epic move up, that was pretty epic and exponential, right? Now, sure, they're making tools for the AI revolution. And that may be the next big thing that we all have, tons of GPUs sitting in our living room. Right now, unless you're a gamer, you probably don't have tons of GPUs made by NVIDIA sitting in your living room. So tying into the fundamental story, and we've got this move down into the roadmap line. We've got this potential move up. If we hold, this would be the trend up, the reversal down to the roadmap line. If we retrace to the 618 and hold this danger zone, I commonly call this the danger zone on NVIDIA here. If we hold that, we may go for another spill down. That dip, that retrace, and potentially push us on down here, 76, 68, 58. And there's a gap right back here on the daily charts that we may go fill. Right back over here. There's one right there that we did fill. Another one down here that we may go fill. And there's another one way on down here that we left hanging back here too. Now, I'm not saying it will fill gaps, but it may fill gaps. So those are some areas to watch on the downside. Now, on the upside, I usually like to look at the bad before the good. The good, if we can break above this zone right here, we have a gap down right there. We're going to need to fill that gap, and we have a second gap right there. So that's kind of a sketchy zone. I would want to see a daily price close above that 125 area right there. Looking for a rally up into this zone right in here. Something right like that. All right. So that's the long and the short of it on NVIDIA. So these levels right down here would be primarily where I would expect it to kind of stop if we break down below this low from just a couple weeks back. Maybe not even a couple, yeah, about almost 2 weeks back. So if we break down below that after hitting up here, may extend right down in here, then we'll see what happens next. I don't have a crystal ball, just have, a bag of unicorn dust sitting here right on my desk right here, just unicorn dust. So I sprinkle it on the market every chance I get, but it's kind of the long and the short on NVIDIA right there. Spotify. Definitely pushing the limits here. Let's just clean some drawings up. And as you might have seen, I do some drawing on Spotify. We've come up right to the prior high. Caution number one. These things do have trouble sometimes breaking high. Now, this looked like a 5-wave down. This looks like I only really see 3 in that move. And one was pretty big. The retrace was pretty small. And look at that. Right to the 100. That could be a corrective move. This could be like that 5-way could be the impulse. This 3 could be the retrace. And we could see this rip down again. In the cautionary. Like I said, I usually start out with the bad. The bad could take us back down to a lower low, 63, possibly even down to 40, right down there. That zone right there. Oh, that looks horrible. How would we know? Your first line of support right there at the roadmap line. We'd be looking for that to hold. If we don't hold that, watch out for a deeper retrace. That 618 level right down in here. And if we start getting below that, well, it's looking like we're probably going to come down here. Now, flip side, could there be some silver lining, some potential, some upside goodness to Spotify? Well, sure. We did the retrace. We popped up. We closed above the 618 here on the bigger time frame. We don't have the trend to like say this was a trend and a retrace because, well, had the IPO right here in 2018 and we just kind of started and we don't have the chart prior to the IPO. Now, things that IPO do tend to be bearish. 95% tend to make extreme lower lows, lower than where they IPO'd. So we see that here. Is that the low or are we going to make one more? I'm not sure yet. All right, that's something to be determined in the market. But this could be the low. And like I said, where is the low? Well, right now, kind of working off that being the low right there. So we've got that down. We've got this retrace moving back up, and it could take us out to 491, possibly 609, possibly if things got really spicy to the upside. Could see that at 1,000, almost 1,100 right there. So that would be, this would be my conservative target though, right there. That 1,448, that's 90% of the way to the 1,272. Now, when we set up this pattern in the market and close above the 618, we tend to get this move 75% of the time. But I'm kind of simplifying this because usually this is a bounce off a roadmap line. And at this point, there's no roadmap line that actually bounced off of because it doesn't have a long enough history to set it up. So at this point, it's a educated guess that we may see that extension to that 490 level, but as long as we're making lower highs, this is still in the cards right here. This deep lower low retrace right there, still in the cards. Not what I want to see. Now, what's the yellow band on the chart? It's what I call the roadmap line. And if you go to my YouTube channel, it is offered up for free right there. It's actually just based on the 144 and 169 EMAs, just made into a handy dandy fancy little line that acts as support and resistance all the time. As you can see right here, Spotify bounced off and went on a run and hasn't been back to it since right back here in August of last year. Alrighty. XOM is the next one I see. Oh, look at that. We had a Near term is very simple compared to some of the other ones. We're not going to have to do a ton of analysis here. We had this high, we had this low. We've got this move up and retrace and move up and retrace, move up, retrace. A little bit of choppiness. Got some closes above the 618, that roadmap line. So this is a roadmap line bounce right here. This is what I look for all the time. Conservative target 126 right there. Right there. You're welcome, Nikki, as always. So XOM, very simple compared to Spotify and some of the other deep analysis I had to do. All right. Google. This one also relatively simple. Remove the drawings. This high, this low. If we can move up above this 618 level, and we actually have a gap down right there at the 618, which gives me extra caution on wanting to see that definitively close in that area. Could give us a 75% likely pattern right there. I actually have a little tool to back test these. And yeah, 91% of the time that Google has done this bounce off the roadmap line, it's gone on to make that higher high at the target at the 1448. Right there, 91% of the time. And it's done that 12 times, usually lasts about 54 days, 54 trading days to make that move right there. That's pretty sweet. That's why I look for that pattern all the time, because it's a high probability pattern right there. Showing the power to pay out. Some tickers pay out more often, like this one, higher probability than others. Some of them don't tend to respect that pattern. So I like to know and turn on my tool to see right there. So that's Google right there. Now on the downside, I usually look at the bad first, but that one set up very nicely for an extension higher. And until we break below this low, don't really expect further downside, but we could, in fact, get a retrace back down in this zone right here. And circling back to XOM, hate to do that on you, but if we break down below this low here, we may return back to this low at 96 right here. So that's an important low on XOM right there. We may see a return back to this level right here if we break down back below that right there. And the first indication would be a sustained move below the roadmap line, break down below this, probably going down here, if not making a lower low right there. So that's Google and XOM right there. All right. Any more requests on the, I can pull up a few that I brought with me. One that I've really liked longer term. We're going to have to zoom this out just a little bit to a weekly chart. Smith & Wesson here. This one did a very nice move up off the lows. Did a 618 retrace right here. I picked it up at 10. It's still hanging at 14, so we're only like 40% up off my buy. But the potential for this one is that 3-wave move, or that 3-point tool, measured bounce, that high, this low, right here. Looking for a 78 potential, 144 above that. And it could take a few years. This could take us out 26, 27, 28, 29, 30 even to get up into these levels. But it's already on the chart. It's already on the path. And I do expect this one to keep rocking and rolling. That's one I am in myself right there. That's Smith & Wesson. All right, Costco is kind of played out right here. And that one has rock and rolled higher for a while. Now, jumping down time frames, the daily chart did this interesting pattern right here that I call a watermelon seed squeeze, which is an unreliable pattern, but it went on to make higher highs out of this. I call this a watermelon seed squeeze because it's like squeezing a watermelon seed. You don't know where it's going to pop, whether it's going to pop up or down. This one happened to pop up. So we've got that consolidation right there, the big knee jerk pullback. And then we popped up and right here, found resistance, pulled back, and got another extension. Now we've pulled back to back test it from the top, roughly. And we kind of poked through, retraced, moved up, retraced. So at this point, just keep moving down smaller and smaller patterns to see where we might stall out on Costco. Costco kind of topped out right there beyond the 1618 and retraced. So that move's played out, doesn't really mean anything for us. This move to retest that prior high right there. Got a lot of stuff drawn on here. Let's just start simplifying a little bit. Remove prior stuff that doesn't matter. I've talked about this one a lot in the past, is why I already knew about this. And I just hit the wrong key. That high right there. Kind of back tested it. So even though we didn't hit the roadmap line on the daily chart, we did hit it on the 4-hour chart right there, going down time frames. So at this point, we did just close above that 618, and we did just set up this potential move up here. But we're getting hypoxic up here and in need of a potentially larger retrace on Costco. So I would be very cautious on the extension here. This extension could be the last extension we get for a little while. This has worked 80% of the time on 25 prior instances in the past. Right there. Average trade takes 42 bars on the 4-hour time frame. This tool does adjust to the time frame. So this bounce right here, potentially playing out. And my system did not actually take that trade right there. Didn't actually get involved right there. That correction probably took too long, or hasn't taken long enough. Let's see. It's usually a time frame situation. Interesting. Yeah, it took too long. This correction took too long to bounce. Didn't meet the time requirement. But this still may play out right there on Costco. Now, downside can be very vicious. And this one's been up, 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 up a lot. We could easily return right back down here to the 500 area where we consolidated right in the middle of that watermelon seed squeeze. Consolidation back there. Some people call it a descending triangle, a pennant, or whatever you want to call it. Did look like a bull flag pennant thing. There's lots of names to the different thing. I call it a watermelon seed squeeze because it can pop out or it can pop down. It tends to be more unreliable on that. Once it starts popping and gets continuation, it does result in a big move, but you don't know until you get the breakout and the continuation. So this, if breaking back below this prior high right here, we may see this retrace very deeply from up here at the 800s down to 500 again. Be a pretty dang deep retrace. So definitely want to be careful on Costco. If we start breaking down at all, could be in for a large retrace. All right. There you go. Thank you, Marianne. All right. She says that she thank me for the analysis. It says everybody should come visit us on YouTube and follow me. All right. Another one. I brought a couple more we can go over. This is one little sketchier, but still very nice potential here. Right here on NEM. Got to zoom her out. I'm going to have to go up to a weekly chart to get it to fit in the chart. It won't zoom out enough. So we've moved up off this low right here. Retraced again, very similar to SWBI. Now, I really like to see this confirmation of a breakout. I did buy back here, took a leap of faith, bought some $60 strike calls out in the 2026. Now, that's still up above where we are right now, expecting this to break out and looking for this move up here. Absolute insane kind of potential here. But we've had a nice move up, a retrace, measured bounce, sitting right here. If we can break above this prior high right there on the retrace, that's very 3-wavy right there. We look at this another way. That move. Came up a little shy on that move. Make sure I got the right highs there. Missed it slightly. Missed it slightly. Came up just a little shy there. That could have gone a little deeper. So I was very cautious right there on my buy. But if we can break above this and get the confirmation, pretty much sets it up for that bigger move. Now, another thing to watch, that 618 comes in right there at that prior high. So this is an important level to break above and get above right here on NEM. Like I said, I bought aggressively down here, looking for this to clear this. May book some profit here in this vicinity before we get the extensions. Now, very, very conservative extensions, 99, much more aggressive extensions up here at 160 area up here. And my $60 calls could potentially be worth $100 at that kind of level. Just some absolute ridiculous kind of numbers, absolute ridiculous potential. That's the power of these patterns right here. And catches a lot of people by surprise. So, some smaller time frame ones that I brought with me today, EWC. And this is on the daily chart here. Same kind of bounce right here. This high, this low, potentially kicking off right here with a target only 39.60. Only like $1 upside right there. So a little bit smaller pattern right there. Another one that just set up. Not too late yet. Meta. Nice high, nice low. Got the close just a couple days back. Still on the march higher. That target right up here on Meta. Right like that. Right there. All right. Some other popular ones. Looking for that one to finish setting up. And we'll just remove the drawings. Get that high, this low. Today, if we get the close above, this could be a signal. And we're going cruising right up here. 243, 249, upset targets there, and extension 266. I would be very cautious once we got up here. Then we may get the retrace. And another one. Let's see. Look at this right here. Just the actual market. Now, this is a cautionary danger zone right here. If we can break above this danger zone, we have the potential to go make new highs in the market, 57.48, possibly 58.22. If we turn down here, has the potential to get that deeper, more sinister retrace going to the markets. Maybe a crash-like situation to watch out for this right here. Could potentially be upwards of 800 points decline. If we stop here, we get that CPI in the morning, could get a knee-jerk reaction tomorrow. This is something to be very, very cautious of in the coming day or two. CPI, retail sales, unemployment claims. One of these could tip the hand for a bigger, deeper correction here. Now, if we can get above this resistance, this prior high right over here, get the all clear on higher targets, 57, 58, 6,000 right there would be the upside. Hopefully don't scare anybody, but there's a crash scenario in the market right here. We'll probably get like a big knee-jerk reaction, small retrace, and then that would be the opportunity to short the crap out of the market if you're going to do that. So I've been warning for this for 2 weeks now. We had a little baby, one of these setups right back over here for this move. If you got caught off guard just a few days ago, last Monday, we came up, hit that on Thursday. Friday we're here, and then Monday we're down here. So that was a very quick little move right there. Just clear up a few lines on the chart here so you can see it a little better. So we did this first move down. This was on a 4-hour. Didn't quite touch it on the 4-hour. The 1 hour went a little deeper. Came up there and then plummeted out. This was a little harder to see, but it formed up here. Got that retrace and then bam, right down there. So be careful out there. These patterns work upside down, right side up, and can be pretty wild and devastating when they play out right there. I did not expect that to go down that fast, but it did. And Got to be careful. Another one that did a similar type move. Let's remove some drawings. And why I caution about taking profit when we get to that extension, especially the 1618. Look at that. That in 3 days that went from the 1618 right back down to the roadmap line there on IWM. Small caps, Russell. And we have this high now in place, that low in place. If we can get back through the gap, we could go on extension to 233, 237. But if we stall out at that gap, we could be looking at a more devastating drop in the market. Somewhere down here around 169, 178, 185. I've got alerts all down there because I'm very cautious on this potential right here in the market right now. All right. So there's a cautionary tale in the market that we could drop on down right now. We have this set up across a bunch of tickers in the market right now. Just want to be very cautious, very, very cautious for me right now on those. And I can pull up another couple. Let's see. I don't know if this one played out yet or not. MPC. Getting close, but no cigar so far. So this one had a high right here, low right here. And we're just sitting here. We've got, that was the activation right there. Sitting here, sitting here, sitting here. 187 is the target right up there. Primary target, extension target at 190 on MPC. Not a huge move, but nice from where we are right now. A nice potential, 6.8% higher on shares. Can make some decent money on a call option or a call spread right there. Now that trade tends to take a few days, like 31 on average. All right. Another one. Just go for another one. I think Yum already played out. I'll show you one that worked out a few days ago. Yum Brands. This went from, oh, hadn't played out yet. Still in progress. This one right here, closed above, right back here. Still hanging in the vicinity. 145 is the target right there. Nice potential right there on Yum. Oh, KDP is the one that played out. The KDP, that's the one. That's the one I was thinking of right here. This one right here played out already. We had this high right back here, this low right here, and it spiked up right there and got us out right to the target. We had the entry right here, that candle, and it retraced a little bit the next day. Or excuse me, the entry was right here, retraced just a little bit the next day, and then shot up here just a few days later, right there. And it may go up to the target again, but that's, I don't have statistics on double hits, just single hit got us out right there on that trade. Another one that played out recently, or is playing out, excuse me, it's playing out recently here. This high, this low, and this one's still consolidating in here. Potential to run up to this 73 area right here. Right like that. Any more ticker requests? We've got just a minute more. So if you want a last call for tickers, I will be doing more of these requests live tonight at 5 p.m. on YouTube. If you want to come join me, make sure you subscribe and hit the bell with the notifications on my YouTube channel. That's jeffrytrader.com/YouTube. Right there, David, do it in the chat. And all right. AVGO, I see that request. Now, it's been an interesting pattern with these stocks that have done 10 for 1, 20 for 1, 50 for 1 stock splits that we've seen a large retrace And if you look at AVGO, it did the pattern right here, this roadmap bounce type pattern right here on the daily chart. Has the potential to move above this prior high right here. Does have that little gap down to be cautious of right there. Could be resistance. If we get above that, I'd like to see that extend right up to this 193.80 level right in there. And I'm actually shooting for the 202 level, but the conservative exit would be 193.80 right there. And then gold, Barrick Mining. This one, not, let's go actual Barrick Mining, not the gold to metal price. This one has been less awesome than NEM. NEM has been my weapon of choice for this potential move in gold right now. This one did a 3-wave move up, as we can see right here. Less clear. That move up, that retrace, that move up right there. 3 move. 1, 2, 2, not 3. And this is the 3 right there. That's kind of a corrective type move, and we could see Barrick return lower. Now, that all said, could be a nested up pattern. We moved up, we retraced, did the 618, moved up again. That measured bounce off that first move, came up shy of the target. All right. So this low, this retrace also did a potential measure bounce. This low, this high, this low, and it puts it the same exact targets. That's kind of funny right there. The confluence of targets on the 2 different retraces on 2 different size moves puts them almost exactly lined up in a stair step here. These could be the upside targets for Barrick Mining here. Expect something in the 40 zone, something in the 55 zone, and something up here in the 80, 85 zone. Right there for Barrick Mining. Potential extensions. And like I said, my weapon of choice right now is NEM. I find the chart a little cleaner than this nested setup right here, but this one may work out just as well on GOLD. All right. All right, David, if I guess any last minute requests, otherwise I can wrap my piece up here.